when I put this trade on, and what we could see on here was that I'm using Heikin-Ashi candles, and they're like a blended candle. So they tend to show a very nice trend. They will be green for a while and then they'll show red. And what was happening here is that we saw red all morning. So we just red, 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 red. And then we saw a bottom. We saw a second bottom. So we saw a bit of green. We saw a second bottom here. Very little volume. You can see how little was trading. And then we ran up and we actually hit this second standard deviation off the VWAP. And what I'm looking at in this scenario is I'm looking at this volume profile here, which is a paid indicator. And I feel like it's well worth it to pay for this indicator. So I have it on here at all times. But on the 39-minute time frame, we saw just a huge volume at this 5470 level and this large red candle. And now we've got a slightly green candle, and just the volume profile on this side. When we look at a large candle like this and we see this red line, this is called the point of control. This is where the largest volume was trading. Typically when we see that, when we see VWAP and a point of control, there's the stock or the underlying is going to be a slight magnet to that once it's petered out from the selling. We've got people selling, selling, selling all morning, and then we hit a point where they stop selling, we rally a little bit, we hit that point again. This is called the double bottom. Looking at that, using confirmation with the fact that there is a low volume here, what my assumption was that if we started to rally, it would be rather quick. The reason for that is because we saw a quick drawdown and we saw this on low volume.